You are determined to continue to raise interest rates, so I want to take a look at where you're headed. In December, the Fed released its projections on the state of the economy under your monetary policy plan. According to the Fed's own report, if you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year, more than a full point higher than it is today. Chair Powell, if you hit your projections, do you know how many people who are currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people.
5.7 million people. That's how many people in the United States are unemployed. That seems like a staggering number. I mean, over 5 million people in the United States are out of work. That would be like if the entire state of Minnesota was out of work. But regardless of these high numbers, the unemployment rate in the United States is only 3.4%. That's the lowest it's been in 54 years. So 5 million Americans are unemployed. Yet the unemployment rate is the lowest it's been in a long time. But on top of all of that, millions of more Americans could lose their job due to rising interest rates. But the Fed claims that interest rates have to rise so that inflation can come down. So where do we go from here? On one hand, we have the lowest unemployment rate we've seen since 1969, and on the other, we have some of the highest inflation we've seen in 40 years. Each month, reports come back about different factors that affect the overall health of the economy, and overall, the reports seem to be pretty good. The dollar has performed well in the markets recently, and interest rates have been falling slowly. The Fed seems to believe that based on these reports coming back featuring good economic performance despite such high interest rates, that they can continue to raise interest rates, but not only that, raise them faster and higher than previously thought possible. Jerome Powell is essentially saying that he understands raising rates will likely lead to a higher unemployment rate, but because the unemployment rate is so low, and because recent economic reports have come back positive despite high interest rates, lowering inflation as quickly as possible is the way to go. Here's what Elizabeth Warren, a Democratic senator from Massachusetts, said to Powell at Tuesday's testimony before Congress.
So then the question becomes, we've got 2 million people out of work. Can you stop it at 2 million people? History suggests that the Fed has a terrible track record of containing modest increases in the unemployment rate. Once the economy starts shedding jobs, it's kind of like a runaway train. It is really hard to stop. In fact, in 11 out of the 12 times that the unemployment rate increased by a full percentage point within 1 year, unemployment went on to rise another full percentage point on top of that. If that's what happens this time, we'd be looking at least 3.5 million people who would lose their jobs. So, Chair Powell, if you reach your goal and 2 million people get laid off by the end of this year, and then, just like in 11 out of 12 times that unemployment has risen by a point in a single year, it keeps on rising, what's your plan?
Well, right now the unemployment rate is 3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control.
I'm looking at your projections. Do you call laying off 2 million people this year not a sharp increase in unemployment?
I would say 4.5%.
Explain that to the 2 million families who are going to be out of work.
We're not targeting any of that, but I would say even 4.5% unemployment is well better than most of the time for the last 75 years.
In other words, you don't have a plan to stop a runaway train if it occurs. Chair Powell, you are gambling with people's lives.
So do you agree with Warren? Is the Fed making the wrong decision to raise rates more quickly, knowing that it will ultimately lead to job loss? Or do you agree with Powell, who seems to believe that there's some wiggle room in the unemployment rate, that lowering inflation should be priority number one because inflation affects all Americans, and that higher interest rates and even a higher unemployment rate will lead to a quicker decrease in inflation? Let us know your thoughts in the comments down below.
The first thing I'll say to start off is Jerome Powell has one of the hardest jobs in the entire world. He's single-handedly responsible for the largest economy in the world, and the decision to make regarding this inflation situation is not an easy one, considering both sides, as explained in what we've been covering in this video overall. It's not an easy solution. Now, Elizabeth Warren went hard on Jerome Powell regarding the jobs that will be lost should we continue to see interest rates go higher. When it comes to, in my personal opinion, the aggregate gain or loss, again, nobody wants to see layoffs, nobody wants to see unemployment. But the entire population of the United States has been struggling, as most parts of the world have been, with this rise in goods and prices of different services. It's very, very costly, and it really makes life harder for a lot of people. So overall, I think interest rates continue to go up, as the Federal Reserve, Jerome Powell, has mentioned, is not only sort of a necessary evil, but it's something that we as traders and investors should probably be prepared for. It is very likely that interest rates continue to go up at a faster pace, as that is sort of the narrative set forth by Jerome Powell in his recent thing that he went in front of Congress and did. So I think as a trader, how does this impact you as a trader? Well, I think that knowing that this is their objective, that this is their plan, puts some extra spice on the US dollar. Now, in the short term, jobs numbers come out, that could be volatility back and forth, but I think the picture overall still for the dollar is bullish overall due to the fact that, again, down the pipeline, there are more interest rate hikes coming, and that wavery line between recession and, being able to have some sort of normal soft landing, that sort of thing. That's what investors are trying to weigh. But my personal opinion is that the dollar still looks pretty strong amidst all this, as uncertainty and fear are still sort of on the horizon with the whole picture.
Things will get even more interesting because Friday we have the NFP report coming out, which will update our unemployment rate yet again. The unemployment rate is currently forecasted to remain unchanged, but we got the ADP non-farm employment change numbers back today, as well as the JOLTS jobs claims. Both of these numbers came back better than expected. The last time that happened, we saw the unemployment rate drop. That was 2 months ago. And in fact, last month, the unemployment rate dropped as well. So signs seem to be pointing towards another drop on Friday. And if that happens, I believe that will be more confirmation for Powell and the Fed that raising rates even more aggressively is the way to go. So much hangs in the balance as we wait for Friday's NFP event, CPI next week, and ultimately the FOMC decision on March 22nd. Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.